Hi, I'm Takoa De Silva with Sprott Global Resource Investments, and I'm sitting down here again today with Rick Rule, Chairman of Sprott U.S. Holdings. Rick, as always, good to see you.
My pleasure, Takoa. Thank you for doing this.
What I'd like to ask you about here today is, or what I'd like to talk with you about rather, is the subject of conference attendance as an investor. From what I understand, that you've been attending conferences for years, both as an exhibitor, but I think probably starting out maybe as an investor. And I'm wondering if we can talk about your experiences along the way and the type of things that you've gotten out of that activity. So to start with, how many years have you been attending conferences as a plainclothes civilian investor?
Well, certainly at least since the early 1970s, which would suggest that I have a 40-year duration in conference attendance and presentation. And I should stress at the outset that when I'm at a conference today as a presenter, I am certainly also an attendee. I attempt to get as much out of a conference as I possibly can, which is one of the reasons why this interview is, I think, so important. I have benefited greatly from every role at conferences, from presenter to attendee to exhibitor, and I think it's important for people who plan to devote the time and attention necessary to attend a conference to understand how to get the most out of it.
And just a minute here, I want to ask you about any specific stories, anecdotes that come to mind about something really cool that happened at a conference, rewarding. But before I do that, the other day in sitting down and talking with you about it, I discovered that there were three phases, if you will, for conference preparation: pre-conference activities, in-conference activity, and post-conference activity. Could you talk to those three phases and their importance?
Yeah, I think that's critical. And I think before I start, most attendees should know that most of their competitors, which is other attendees, people competing with them for investment ideas, only think of the conference in terms of their time spent there. And then they probably only spend half of the allotted time productively. So to get your money's worth out of a conference, what you say is exactly right. There is pre-conference, the conference, and there is post-conference. I think that's absolutely the case. Pre-conference means that you prepare yourself so that the time you have at the conference you utilize efficiently. Study who the speakers are. Study what you expect to get out of each speaker, and budget your time. If there is a speaker who you don't think will be beneficial to you, you might consider skipping his or her talk. Consider in the context of the speakers what questions might be appropriate for you to ask during the question and answer period. In other words, if a speaker is there speaking about gold royalties and you care about gold royalties, what part of it do you care about? Be prepared to extract the maximum benefit that you can. Study the companies that are exhibiting at the conference and try and determine before you go the priority with which you will attend to the exhibitors. Going up to the booth and asking questions about the exhibitors is a wonderful way to get more out of the conference. And just don't ask the exhibitors about their own company. Go to an exhibitor and say, other than yourself, tell me who the top 3 companies on this exhibition floor are and why. There's all kinds of wisdom to be had at this conference if you understand how to get it out of it. But a lot of that really has to do with your preparation. Another thing that I frequently do that many investors don't know that they can do is before the conference, I email as many of the speakers and the exhibitors as I can so that I can arrange either special time to spend with them, or I can ask them questions about their presentation or their companies or their areas of expertise so that I am more prepared when I go to the conference to get as much out of it as I can. The conference itself might be a 1-day event, 2-day event, 3-day event, 4-day event, whatever it is. If you are going to maximize your time there, you have to understand that you are going to run an absolute gauntlet. There is so much information available to you that you're going to have to be extremely organized. And by the way, you're going to have to have an awful lot of endurance to be able to participate and compete. The first thing is, irrespective of your age, take notes. I remember a lot better if I have it written down on paper. Most people don't. Consider using the recording device on your iPhone for pieces of speeches that you find particularly appropriate. Organize your time very efficiently. Hopefully have an appointment book set up before you attend the conference, so that you can make sure, to the extent that one-on-one time with a presenter or an exhibitor is possible, that you are early on the calendar and not disappointed. By the time you get to the conference, that speaker or that exhibitor's time may already be booked up by other people. The way you win that fight is to show up and compete ahead of time. Understand also that the workshops, the breakout sessions, are often more informative than the general session presentations. The truth is, myself, as a conference presenter, I normally use the general session presentation as a way to drive traffic to the workshops. In other words, I get the real work done. I do the real communication in the breakout and workshop sessions, which are smaller, more focused groups of attendees. And I suspect that I'm not alone among presenters. So understand that if the presenter has a general session and a workout and a workshop or a breakout session, that the real information, the real hard work, is likely to take place in the smaller, more focused venue. So be sure to allocate your time among the speakers or presenters that you're particularly interested in a way that focuses on the smaller and breakout sessions. Another critical thing is to understand that in a conference, I'm talking while we're still at the conference, by the way, in a conference that has, like our Vancouver conference, 30 presenters and 800 very wealthy people in the audience, the idea that all of the knowledge present at the conference flows from the dais, that is, the 30 presenters, to the 800 people, is farcical. Understand that some of your fellow delegates are going to have an awful lot to offer. Listen carefully. Particularly listen carefully to the questions that are asked by other attendees to the speakers. And if you notice somebody asking particularly astute, informed questions, go up and introduce yourself to him or her. The idea that among 800 rich attendees looking to increase their wealth, that there isn't an awful lot of expertise that you can borrow is silly. Compete in that regard too. Use every available resource. At the beginning of the day, before you hit the conference floor, map out your day. Think about who you're going to listen to and think about the information that you would like to extract from that person. At the end of the day, before you go to bed, remember, if you can, in writing, the things that occurred during the conference that you think are most valuable to you. And remember particularly the mental notes you made about follow-up, so that you in fact remember to follow up on them when you go home. After the conference may be the most important of all. The first thing, when you go to a conference, TCOA, you are going to be inundated by absolutely spectacular salespeople, both the presenters and the exhibitors. The most important thing to do at the conference is nothing. Absorb all the information, but do not act. This is for two reasons. There are an unlimited amount of opportunity, but there is always a limited amount of capital. And you want to make the capital allocation decision empirically, not emotionally. And you'll hear an awful lot of emotional pitches at a conference. I guess that's really the most important reason. Having assimilated all of this information at the conference, and you will have asked permission at the conference to follow up with various speakers and exhibitors that are of interest to you, do it. Absolutely do it. Interview them. It's very difficult for an exhibitor in particular, but also for most presenters, to turn down an interested appeal for a one-on-one discussion with somebody who has done that presenter the favor of having listened to what they had to say and assimilated it. And the probability that you can obtain a second a follow-on one-on-one discussion, which could be much more beneficial to you than simply listening among 800 other people to a presenter. The possibility of that is high, so ask for it. The other thing that you do after the conference is pay particular attention to the arguments presented by presenters that make sense to you, and follow up with original research to determine whether or not you believe those claims are true. Often, if something sounds too good to be true, and remember these are spectacular salespeople, they are. So, like Ronald Reagan used to say, trust, of course, but verify post-conference.
Rick, when it comes to newsletter writers, if the person watching is considering buying a subscription to a newsletter writer service who's going to be speaking at the conference, have you gone as far as to asking the newsletter writer for a trial period subscription ahead of the conference or possibly afterwards to get to know their work more since they'll be speaking there?
I don't know that I've ever done that at a conference, but I have certainly appealed to newsletter writers for a try before I buy, which is sometimes successful, sometimes not successful. But what's the harm in trying?
So I'd like to ask you now, when you think back on the about 40 years there that you mentioned about attending conferences as an investor, any story or two stick out in your mind? A real interesting experience dealing with maybe fellow investor attendees or exhibitors?
Well, certainly the most dramatic example I can give you of personal benefit occurred in maybe 1998 or 1999 at an obscure conference in Western Australia called Diggers and Dealers. Diggers and Dealers is very colorful. It's held in a town, a mining town in Western Australia called Kalgoorlie. And the theme of the title, as the name suggests, is that the financial interests in Australia meet with the mining people, hence diggers and dealers. And Kalgoorlie, to put this in context, is sort of 1,000 kilometers from anywhere. It's a town that in those days produced 1 million ounces of gold a year from within city limits. In fact, the super pit, the Kalgoorlie super pit, approached the town from the northwest. And when I say super pit, the pit was a mile across, a truly spectacular pit. At any rate, this was a very pleasant, very focused, and in those days, very small conference. I think I was the only non-Australian present, which meant, among other things, that all of the exhibitors viewed me particularly as fresh meat. I was extremely popular being non-Australian, being American. And as a consequence, really, of my notoriety, I was able to visit with virtually all of the presenters and certainly all of the exhibitors, an exhausting set of circumstances. And I remember at the time being attracted to the uranium business for reasons that we've discussed before. Reasons like nobody else cared about it, and the cost to produce uranium exceeded what it was selling for, so the price had to go up. And I remember coming across, lo and behold, a little company in the uranium business called Paladin Resources. And as a consequence of being the only one in the audience that cared, I was able to spend a substantial amount of time with John Borshoff, the CEO of Paladin Uranium, and I was convinced to do a financing in Paladin Uranium at 10 cents. I was convinced subsequently to do another financing at 12.5 cents. And I was rewarded for my genius with the share falling in price from 12.5 cents to a penny. We financed it again, if my memory serves me correctly, at 1.5 cents. I know so far to COA this doesn't seem like a benefit. But what's of note is 3 years after that 1.5 cent financing, the stock was trading at $10. There is no way in the world that I would have found Paladin had I not gone to that conference. There is no way in the world, had I accidentally found Paladin, that I would have had the opportunity to spend 5 or 6 hours with John Borshoff. There is no way, without having established a personal relationship with John Borshoff, that I would have had the courage to write the 1.5 cent check after the 12.5 cent failure.
Rick, I think for the person watching, if they're new to the natural resource space, they might be thinking, well, had I had that opportunity, I wouldn't know what questions to ask or what to look for in the company. And so we've produced a document here called the Guide to Natural Resource Investing, which contains your ideas and the questions, the system that you followed in interviewing companies in the past. And I'm wondering if you can talk just a little bit about that. And for the person watching, I'll explain how they can get a free copy of it.
Sure. It's a pretty easy process. And if, as you suggest, the listener to this video downloads it and takes it with him or her onto the conference floor, it's useful. But the interrogation process goes something like this. First, let them tell their story. You can't help it. They're pre-programmed to do it, and you have to let them get it out of themselves. So spend 5 or 6 minutes and let them do the 30,000-foot version of their story. And then say, you know, that's, if you are interested, that's very interesting. I'd like to ask you some questions so that I can assimilate your story into a framework that I can deal with. The first question would go something like this. Tell me what your company's liquidation value is. I know how many shares outstanding you have and what they sell for. That's the price. What I'm worried about is the value. And I don't want you to talk about your assets in terms of the market cap that they might compete if owned by a competitor. What I'm interested in is what's the liquidation value of your company, the blowdown value. If you took the projects out and sold them for cash to a competitor, what's it worth? I'm not suggesting, by the way, to COA, that if you can't buy companies for dimes on the dollar in terms of liquidation value, that you don't do it. I'm just suggesting that if you know the liquidation value, you know the downside, which is important as knowing the upside. The second thing that you ask them is, please distill for me the most important unanswered question right now. What's the thing that you can do right now that will deliver me the quantum increase in value that is required to induce me to take the risk to invest in your shares? I understand that you're trying to prove a 5 million ounce gold deposit, but what's the first step? What's the most important unanswered question right now? It might be that the company has done surface sampling and established a grid, and what they need to do now is trench to see how deep that gold mineralization goes. It might be that they have in fact trenched it and they've developed a drill target. So the next thing that they need to do is shoot geophysics or in fact drill a hole. But find out from the presenter what the most important unanswered question is, how long it will take to get an answer to that question, and how much money will be required to answer the question. Then try and figure out in your own mind if the reward associated with a yes answer is worth the risk that you're being asked to bear. Now, the managers love to answer that question if they're any good. But surprisingly, probably 70% of the people that you address that question to will never have thought of it. This is analogous to COA, to you and I deciding to walk to Los Angeles, getting the right shoes, a couple bottles of water, and heading east. If you don't have a plan, how are you going to get somewhere? So the good news about this question is you get to throw away 70% of the companies and never spend any more time on them. But assuming they survive that, you move on to another question, which goes something like this. You don't need to be impertinent about it, but say, no offense, sir, but tell me why I should care about your opinion. Tell me specifically about your past successes and your experience in this area. If what you're trying to do, if what you're trying to get me to do is help fund you for precious metals in tertiary volcanics in the high Andes of Peru, have you been successful doing this before? Do you have any relevant experience? And tell me about the rest of the team. Tell me about how their specific experience fits into the specific task at hand. What you will find is that perhaps 70% of the 70% who survived the last cut might survive this cut. You will find people who say, well, I've been a success at mining, Toccoa. I operated a gold mine in Quebec. But the truth is that the expertise required to operate a gold mine in French-speaking Quebec in ancient rock can be very different than the expertise required to find a gold mine in young volcanic rock in Spanish-speaking Peru. So it's very important with this question that you come to the point of specific expertise. Then you can say, in no particular order, because the order is better established in the piece that you're going to have the viewer download, but you can say, that's very interesting and it's reassuring to me that you and your team have this expertise. Talk to me about how much confidence you have. This company has 20 million shares outstanding, and how many of them do you own? In other words, do you have the courage in the project and the courage in your own expertise, or are you merely a hired manager? If somebody says to you, well, I don't own any stock, but I have 10 million options, you say, oh, well, are you trying to sell me options or stock? I don't understand. Are our interests aligned or are they not aligned? It's better to deal with partners than to deal with managers. Moving on from that, if we assume that we like the people and we assume that our interests are in some way, shape, or form aligned, and we like the property, we need to go to means, Tekoa. And I'll tell you another interesting story now about an earlier conference experience. Many, many years ago, probably 30 years ago, I was exhibiting at something called the Boston Gold Show, which no longer exists. And after I got off the podium, I was going to get on a plane, so I had changed from my corporate regalia to blue jeans and a polo shirt, and I was wandering around the floor, and there was a particularly aggressive promoter. You know, the type of sort of a white shoe guy, wonderful salesman. At any rate, I attempted to get past his booth unmolested, but was unsuccessful and dragged into the booth. And he was just vociferous in his company's exploration potential and an extraordinarily aggressive program to drill it off. And I, at one point in time, remarked, well, this is an extremely aggressive program. I understand what you're saying about news flow. How about money? How will you accomplish this? And I'll never forget, Tekoa, he looked at me and said, well, money's unimportant. And I couldn't help but take the bait. I said, really, my money's important. Explain to me why money wasn't important. And he said, there's a real hot West Coast broker named Rick Rule, and he really likes my project. He obviously didn't recognize me. And he's going to give me all the money I need. But see, here's the opportunity. The stock's selling at 50 cents now, and he won't finance under $2. So when I get the stock to $2 from 50 cents, Rick will finance, and you will be able to leverage off Rick's money at $2. And I, at that point in time, pulled out my wallet, pulled out my driver's license, showed it to him, and said, you know, I know this Rick Rule guy pretty well, and I think the probability of you solving your financing problems with him is extraordinarily low. So when I say listen to these stories but verify, that's what it has to do. But getting back to the main thing, this is a capital-intensive business, and if the company has no capital, they have no business. And so if the person telling the story has reasonably convinced you that he has an important unanswered question, you need to say, so how much money does it take to answer this unanswered question? Because an unanswered question has no value. Suppose the person talking to you says, well, to answer the question technically is going to cost me $2 million. Okay, that's a good answer. And how long will this take you? Perhaps 2 field seasons, so 18 months. And what will be your general and administrative expense over 18 months? $1 million. Okay. So it's going to take you $3 million to get me to a yes or a no answer. Is that correct? Yes, they respond. That's correct. And how much money do you have? $1 million. Well, subtracting $1 million, which is what you have, from $3 million, which is what you need, leaves a $2 million gap. How are you going to bridge this gap? It isn't important necessarily that they have the money in the treasury, but they better have a good story about where they're going to get it and what it's going to cost them. And if they say, I'm going to get the money from Sprott, call and ask Sprott. Say, who at Sprott is going to give you this money? It's very important to me to verify that you have the means to achieve this end. If I can't verify it, obviously I can't speculate on this occurring. I wouldn't have enough information. You're with me so far?
Yeah.
Another thing that's very important that you can do at conferences is you can say to the person, whoever it is, you know, if I invest in your company, I'm going to read the quarterlies, I'm going to read the press releases, I'm going to read the filing statements, and I am going to be looking for how to understand your incremental process. up to getting a yes or no answer on that unanswered question. Who specifically in the company can I talk to give me human color on these filing statements? Where will I get my information? I'm not asking you for material non-public information. I'm asking for your help in deciphering the corporate speak that I will see in filing statements and in financial statements. So who might I rely on to facilitate my ongoing understanding of your company? Many attendees think, as an example, that if they're talking to the CEO of the company, that the CEO is too busy to talk to them. If it's a good CEO, that is not the case. If it's a good CEO, that CEO is so wrapped up in what they're doing that they're thrilled to talk about it. They don't want to talk about baseball. They don't want to talk about politics. They don't want to talk about opera or popular culture, because that's not what interests them. They want to talk about their company. And if the person doesn't want to talk about their company, you will know that they are not suitably interested, and you shouldn't be interested either. So establish that personal relationship and follow up.
If I can ask you a question or two more here, Rick, before winding down. While these questions do apply to any conference, we do have a conference here coming up this year in 2015, late July, which is the Sprott-Stansberry Resource Conference. And I'm wondering if you can tell the person watching, why would they want to invest their money and, more importantly, their time in going to this conference? What makes it different, and what should they expect?
Several reasons. In the first instance, this is a paid conference. It's not a free conference, which means that the conference sponsor, that is me, has a loyalty to the attendee. In the free conferences, while there's a lot of good information available at the free conference, the conference promoter's loyalty is to the exhibitor, the people who pay the freight. In this case, our loyalty is to the attendee. The second thing is that attendees have told us in years past that whether or not the conference sponsor believes it, the attendees consider exhibitors to be content too. From a promoter standpoint, the exhibitors are simply revenue, they're simply advertising. But the attendees have told us year after year after year that they consider the exhibitors to be content too. What that has meant is that when we at Sprott choose exhibitors, we will only allow companies to exhibit that we are large shareholders of. It doesn't mean that we made an investment that will always be successful. But what it means is that we have put our money where our mouth is. We understand what the attendees are saying with regards to exhibitors. At many conferences, the qualification to be an exhibitor is a driver's license and a check that cashes, in reverse order, of course. At the Sprott conference, you have to be invited to be an exhibitor. And the third reason is that this is unapologetically a natural resource conference, natural resources and precious metals conference. Many conferences have morphed from precious metals when they were popular to precious metals, technology, and marijuana, or whatever they thought could attract exhibitors. This is unabashedly a resource conference, and a resource conference that seeks to be the best of its kind. In addition to having analytical experts and newsletter editors, this conference will feature 5 or 6 of the top mining CEOs in the world, talking not just about their company and how they built their company, but about how the lessons that they learned building their company are valid to you as an investor. You don't get that at many other conferences.
Rick Rule, Chairman of Sprott U.S. Holdings, thanks so much for sharing your comments with us.
Pleasure, Takoa. Thank you for giving me the opportunity. I'm certain this will be of benefit to people who attend conferences, whether or not they have the good sense to attend ours.